Hello everyone, John here, and today we're going to be scalping the 1-minute charts, and we're going to go over 5 key tricks that you need to understand to be successful in trading the 1-minute charts. And also we're going to go over 3 dangers you must be aware of so that you don't blow your accounts. It's very important to understand these things, and also if you stay to the end you'll become a 1-minute scalping expert, that's for sure. So let's get into it.
This video is sponsored by Kalshi. There's a new kind of trading I want to tell you about. It's called event trading. Basically what that means is you trade event contracts. Event contracts are a new financial instrument that allows people to trade directly on the outcome of events. Let me explain how this works. If you've been studying the charts and you see a weekly trend on the S&P 500 and you believe it is going to end a week higher, with event trading, you make a trade based on if you are right or wrong. So in this case, you would take the trade saying that it will end higher. It is that simple. To try it out, it is quick and easy. Just go to kalshi.com, that is KALSHI.com, and get started today. The link is in the description below.
Right now, the main thing that you can see is on the charts, it's just everything is fractal. So however you normally trade usually continues on with the 1-minute charts, except it's very fast. Now, since it's very fast, we need to use a higher time frame. I like to use a time frame that's 2 time frames above. And if we pick an area on here that was a good place to scalp, would have been this candle. Why? Because it broke underneath the 50. It gave us price action that it was going down. So let's just take a look at this for a moment. If we come over here and drop a trend line on this, you can see we can go up in the time frames to see what's going on. Because if we were looking at this, we'll go over this, but we have a big wick. We have a close and reverse. We have something telling us that it dramatically wants to go down. So at this time, I'd be looking at the 5-minute charts, or actually the 15-minute charts. We want to go 2 time frames up. So let's take a look at that real quick. There we go. And we can see right here, we actually have divergence. We have movement coming up. We have a double top. We have basically everything telling us that we should be turning around on this 15-minute chart. So just by looking at the 15-minute chart, I can see this is starting to turn. It's starting to come down and probably coming down to the 50 because that's where it came from. So that would be one inclination to tell me that we're going to be coming down. So because of that, on the 1-minute charts, that would be telling me, using my higher time frame, that I probably want to be selling at this point, and this would be a great time to sell. Now the other thing we're going to go over is in your higher time frame, you want to get direction. So if I go ahead and go up to the 15, now you can see, let me zoom in a little bit, you can see that this pair has been going down, going sideways, going down, and right now it's coming back up. So it's been in a certain area. And then what we're going to do is zoom in on this a little bit. And we can see that we do have a double top right here. So we're going to look at patterns. We can see that we also have structure. Structure is going to be a big thing we want to put on here because we're going to use structure from the higher time frame. And if we come over here, we can see we have structure down here at the bottom. We also have structure right here where we're at. Get that line up a little better. There we go. And then we're going to have structure down here in the middle. I usually like to have top and bottom and one in the middle. And what that does, it gives me an area to trade off of. Now, what else is important on the higher time frame? Your moving averages. So your moving averages are going to be very important. Also, the fact that we have a pattern, and we went from structure, we went away from structure, and we're going to go down to structures, usually what happens. So we're looking for this to break, come down to this structure, possibly break this structure, and come down to this structure, because that's what the charts usually do. Because if we go back and look left, and we put structure over here on the behind us, you can see what did we do. We went from structure, away from structure, went sideways, came back to structure. So we expect to do the same thing over and over again, and that's what we're looking for it to do. Now down here it did make a W before it went up, and we came up, and now we're doing a double top. So most likely we're going to come all the way back down to structure, most likely. But using this information and looking where we're at, now we can go back down to our smaller time frame and see that we have this area. We're underneath the 50. We're looking for this to pull down, but we don't want to sell until we get underneath the structure. Once we get underneath the structure, we will see price action, and that'll tell us that we want to sell from this area. down to this area. So basically what we're looking for is we're looking for the candles to come down, possibly retest, come back up, and then from this we're looking to sell at this point and take this down to the structure down here below. And that's what we're looking for. And this is how I'm looking for in my scalping. Now, so this is what we're looking for using the higher time frame. Now the other thing we want to look at is also we have moving averages on here. Anytime a moving average is on here, we need to be careful because at this point we could bounce, and we know that, so it could easily come back up to structure. But once we break this, because we have structure here, we want to sell away from it, but this 200 is going to be a point which we definitely want to sell away from this and go down to the next structure. So this is one thing I would be looking at. So also the other thing I like is the 10 EMA. Now up in here, let's zoom in a little bit more so you can see this. Let me go back here. So using your moving averages are a good place to get bounces, because you can see here you had a bounce off of your 50, broke your 50, had a nice bounce down, hit structure, came down below structure, went back up into structure, and now we're coming down. So we're looking for, since the movement does do in a wave-like movement, we're looking for it to break the 200 and come down. So the other thing we're looking at to trade is possibly bounces off of the 10 EMA. So let me zoom in real quick. Erase that off there. I got a big mess on there. And you can see here is our 10 EMA. So anytime we cross underneath the 10 EMA, that's a very good sell. And that gave you 3 candles down to the 200 moving average, which we bounced. So that's why you have to be very careful with the 200 moving averages. So I'm always looking to sell the 10. So here we went underneath the 10. I would be selling this and looking for price action to tell me we're coming up. Probably since I'm scalping, I'm going to use a trailing stop so that it would keep the profit that I have, because quickly it could come right back up. And now my stop would be going above the 50 moving average. And usually when I work off the 50, that's where it's going to go, or above a structure point. That's usually where it goes. Now if I'm down in here and I'm trading off of the 200, I would probably still put it at the structure, but as soon as we go into a little bit of profit, I'm going to be moving that down to the 200. So I'm always going to be moving my stop. I'm always going to be protecting the profit that I've made. And definitely I love trading off the 10 EMA. Like right here we crossed, we had 3 candles down. Here we crossed, we had 3 candles down. Here we crossed up, we only had 1 candle, came right back. That would have been very difficult. So I don't know if I would have taken that underneath. When I'm underneath the 50, I try to look for only sells. When I'm above the 50, I try to look for only buys. So up in here, we really didn't get anything that left. We did have a breakout. The next candle's red came down. We did have a green candle that crossed, and it came right back down. It didn't do anything. So really, we've only had sells. We had 1, 2, 3, 4 sells. And right now, we're actually looking for it to break and come down and go below here. So I would sell again once it comes underneath there. And anytime it breaks the 10 and closes underneath, I'm going to sell and put a trailing stop on it right away as soon as I get into profit. And that'll keep you out of trouble. So the 10 EMA is a great way to trade. Patterns are a great way to trade. So you have a double top, and it broke underneath the 50. And that right there I would have liked to trade just because of the double top, because it's an M formation. I like to trade M's and W's. And basically what that is, let's take a look at that. Let me move this over real quick, sorry. There we go. So here let's take a look at this. We have our M right here. And when we have an M formation, it's going to come down. It's going to come back up to retest, and it's going to sell off. And that's exactly what it did. So first I would sell this one down here, put a trailing stop, and then once it pulled back up, I would be selling this one down too. So that can go in conjunction with your 10 EMA, or you can do it separate just using the double tops. And then I'd also be looking for a double bottom. We can go back in time and try to see if we can find that real quick. There we go. We have a double bottom. So right there, we had price come down. And it's still trending up, but we had a move down. We had a W right here. And as soon as it broke, I'd be buying this up. And then what did it do? It came back to retest this area. It didn't quite make it, so it got down to the 200, to the 20. And then it broke and went back up. So once it broke that 10 EMA, I'd be buying that anyway, because that's one of my strategies that I like to use. Two great ways to get in. So already knowing W's, already knowing double tops, knowing 10 EMAs, knowing your moving average bounces and crosses are good ways to trade. But also, the other way is running off of your indicators. Now, I like to use the RSI, and I like the cross. So when I see the cross of the RSI right here, I would sell that, and then once it crossed again, I would exit the trade. So I would sell it, put my trailing stop, and if I saw that it was trying to pull up, even if I was negative, I would close the trade. Now up in here we saw a real nice one that broke up, and you can see right here it was a buy and it went up, and if you would have put a trailing stop you made quite a bit of money. But the idea is that if this crossed down here you would exit automatically, but most likely the trailing stop will take you out. We're not trying to get out on our own, we're trying to use the trailing stop to get us out. I'm not looking for a long move, I'm looking for scalping. I'm looking for 3 candles. So 3 candles would be quite a bit of money, and that's what we're looking for. Also, you can use your MACD. When it crossed over right here is a very good trade, and you can buy that and put it on the trailing stop and go on up. Here you had a pullback on your MACD, and once it went bright green again, you can go ahead and get in again. Also, you had an RSI cross, so you can put both of these things together. So you can see how powerful your indicators can help you make money in scalping. And also, you have trigger lines. Once your trigger line's out right here, the trigger lines came out of the histogram. You see the histogram's going down, and you can see a gap in here. That's a good sell situation. There's another one. Let's see. Let's find another one real quick. Here's a good one right here. This one here is well, not as good. There's a sell right here. So we see the trigger lines come out right there. And I like this one a lot. So I'd see trigger lines come out. I would see RSI cross. I would see the candles come underneath the 10 EMA. And using everything together, I'd be selling that. Now, we are running into the 50. But I'm going to be putting a trailing stop on this right away. And it pulled back up. For some reason, if it did take me out on the trailing stop. And also, just so you guys know, these stops should be placement should go 1 candle up. So if this is the candle here, we'll go 1 candle up. And we're going to come down this way. Now, if we get stopped out, I would obviously jump back in again because it's definitely going my way. And I would easily get my money back. And I would let the trailing stop take me out. I'm not going to try to, it's so fast, I'm not going to try to get out on my own. But for some reason, your trailing stop didn't take you out. Once your RSI crossed, I would definitely want to be out of this trade. So it's already pulling back up. Now it is setting to go again. But still at the RSI cross, I would probably want to exit that point because we're here to make the money here. And now you have a pullback up into your 10 EMA. You can sell that again, make your money there. Pull back up, make your money here. Now you are going to have some small wins, some small losses, but once you get a large enough win and you hit your goal, I recommend you stop trading for the day. So your goal could be $50, could be $100, could be $1,000. It depends how you're scalping. It depends how large a trade size you're using. You're using a 0.01 or you're using a 1 lot. So when you use 1 lot, you're going to make more, but you're going to lose more. But the idea is you have small wins, small losses, and when you make profit, you stop trading. And that's really the big goal in this. Now, the other thing is the 3 big keys you got to watch out for is going to be the danger zone is going to be news. And the news is always going to be dangerous, so you always want to check the news and maybe wherever you check it out at. Let's see, we use Forex Factory, and we're looking for any red news or medium news that might move the market, because if you're caught in news, that could blow up your account. And if I've had my account blow up, it's because of that. The other thing is going to be seeing maybe support and resistance on a higher time frame. That would do it too, not paying attention that you're trading along. And let's go take a look. So let's go back here to the beginning. So if we see here right now, we're looking to sell off of this 200. We're looking to go down. We know we have the 200 down here, but what is on the higher time frame? So let's go up to the 15-minute chart, and we're going to go up there. We're going to see that once we get down here to the 50, which could be very dangerous for us, we're going to run into trouble. Also, we're going to have these structures that we put on here. So we put structures on here from the higher time frame to help us. So what you might want to do, since we already know the 200's there, is to mark that area. Probably with right there, just mark that. So as we go down, we already know that that's an area to watch out for. Now, where's our 200? Our 200 is going to be, looks like it's up above us. Okay, so our 200 is up above. So let's go ahead and mark that one too real quick. Then you'll see as we go back down to the 1-minute chart, you'll be able to see those locations and you'll be well aware of them. So there's our structure that we're dealing with. But if we scrunch this down, you can see up in here we got to watch out for the 200. And down here we need to watch out for the 50. So if you're not paying attention, you're making money coming down in here and you hit this and you're selling and this bounces up, 10, 15 pips, that would be detrimental to your account. So that's one of the things you got to watch out is support and resistance on the higher time frame. You also got to watch out for the news and also the time of day you're trading. That's very important as far as dangers to be looking out for, because let's say you're trading the New York session and it's 6:30 and you have the New York open for the stock exchange and you're not paying attention to that, you could get a big whipsaw that could actually devastate your 1 minute chart and cost you lots of money. Also, in Asia session, you want to be careful for the Frankfurt, because the Frankfurt usually has a big change and it sometimes goes the opposite direction or gets a large movement that could easily stop you out and cause you to lose quite a bit of money. So those are the things to look out for. But definitely news trading is number one. And hopefully this has helped you. There's been a lot of stuff in here. And definitely if you have any questions, let me know, because we're here to help you make money in the markets. This is 1 minute scalping. It's very fast moving. You definitely never get bored. But if you go over everything that I went over, it will help you be a professional 1 minute scalper. All right, everybody, have a great day and let's make money in the markets. Bye-bye.